Hello, my friends. Welcome to the Boring DAO podcast. For today's episode, I've been talking to Dougie from Figment, and that has been a very interesting talk with a lot of different topics. We've been talking about the general economics, the macro outlook, what it means for crypto in the short term, also in the long term, how we can play the bear market perfectly, and what's happening in Cosmos, how Cosmos might develop in the future, how things outside of the Cosmos ecosystem develops. And yeah, there is so much different stuff in this podcast. I really loved talking to Dougie. He's super knowledgeable about blockchain, about Cosmos, so a lot of very interesting points that he brought up. I definitely learned a lot in this episode, and I hope you enjoyed as much as I did. Let's get into the show. Hello everyone, welcome to the Boring DAO podcast. Today we are sitting here with Dougie from the Figment investment team. And without further ado, I just want to give the word to Dougie. Introduce yourself real quick. How did you get to be where you are today? What are you doing today? And yeah, tell us your story.
Yeah. Hey guys, good to be here. Thanks for having me. I'm Dougie. I work at Figment Capital on the investments team, and I guess to start and go into a bit like how I got into crypto, my journey there. So it was actually, compared to some people, he's fairly late to the party. I was in college in 2020. I was a senior, and I got sent home from school early in March when COVID hit, and that was obviously, like it was for a lot of people, a pretty sudden and crazy experience. And so I had a bunch of time on my hands, and I didn't really know what to do with it. But I was into investing, like kind of in equities and traditional markets more before earlier. I studied finance and economics, so it kind of like aligned with what I was already knowledgeable about and interested in. And so yeah, literally I was sitting at home and one of my friends texted me. He's like, hey, like you should check out Bitcoin. It's super cheap right now. It took a big hit. I think you should buy. And I kind of just followed him, bought Bitcoin, and over the course of the next few months, like I bought like a 6-7K, something like that, made a good amount of money. And I was like, oh, maybe I should understand what this stuff is. It's like my most profitable investment right now. So I dove into Ethereum, started learning about smart contracts, all of those things. And by like October, November 2020, I was just completely hooked. And so I started like getting really into it, just doing a bunch of research, learning about all the different ecosystems and blockchains. Around like May, June 2021, I knew I wanted to work in crypto, but had no idea how to. And so I spoke to one of my friends who's a software engineer, and he worked in crypto, and he was like, honestly, the way to get in is just like to get active on Twitter, show your knowledge, meet people, and eventually opportunities will start coming your way. And so over the course of like the next 6 or so months, that I did exactly that. And literally I started writing threads on Twitter, and those ended up getting some traction. And February-ish of this year, my boss now DM'd me on Twitter, basically was like, hey, we'd love to interview you for a spot in the investment team at Figment Capital. So I did that, got the job, and now for like 3-4 months now I've been working there, and it's been awesome. We're raising our second fund right now, so that's an exciting thing to do. It's cool to be very involved with that. I've never been involved in a fundraising process. I've usually been involved in the other side of it. So it's cool to be on this side, and it's been a great experience working with a bunch of very smart people. It's just been I've been blessed because it's everything I've been wanting to do for the last several years. So to be here is just it's amazing.
Nice, very nice story. I love the fact that also I think a lot of people are in similar situation right now that you were. Like, how can I work in crypto if you cannot write code? It's not so easy to get in, and you heard it. That's how you do it now. Like get active and meet people.
It's super intimidating, because like naturally if you don't code, it's like it's hard to get in. And so like talking to people who are already in the space and asking how they did it is like how I'd say the best way to do it. Like there's no right or wrong way, but like if you're someone who doesn't have connections or just doesn't know what to do, like getting on Twitter, making a name and brand for yourself is honestly a great way to go about it. I think a lot of people have like found success doing exactly that.
Nice. And maybe for the people that don't know about Figment, can you also introduce the company real quick? Was it founded much before you entered, and what are you guys actually doing?
Yeah, so Figment Capital is the VC venture arm of Figment. But so Figment is one of the biggest infrastructure providers in all of crypto. We validate on like 60 plus networks. We're in like 15 to 20 ecosystems, something like that. And just provide a bunch of different infrastructure services. So a big company, you've likely, if you stake, you've likely seen Figment on the list of validators. I think that's how most people like myself came across it. But so Figment Capital, where I work, was Fund 1 started last August. And that was a smaller fund, basically like a feeler fund to see like how this all went. And then right now, Fund 1 went very well. So now we're like, okay, let's raise for Fund 2. And that's what we're in the process of now doing. And I've been brought on to basically help with that, be in the investments team and so forth.
Awesome. So basically a VC company and a staking company in one.
Yeah, exactly. So Figment's like the infrastructure, staking, all that good stuff. And then we do early stage investing in mostly infrastructure projects. So early stage protocols. We're involved in pre-seed, seed, and sometimes Series A as well.
It's kind of interesting because I think you're not the only one. I mean, in Cosmos, you also have Strangelove, who's kind of similar in doing that. Is there some things that really work well together between staking and investing? What are the synergies? Like, this seems to be a common model?
Yeah, it's interesting because so basically for validators, like the more networks you're on, and not necessarily true, but the more quality networks you're on, the better. And so naturally, like if you're an early stage investor, you're constantly on the lookout for new investment opportunities. So it aligns really well because basically, let's say I find a new L1 that like I think Figment would be, a great fit to validate on. Like I get that foot in the door, talk to them, discuss potential investment and other opportunities. And then if we see a good opportunity for Figment, we can pass it over to them. And then again, like you said, our synergies are just perfectly aligned. We're supporting a network that Figment is also validating on. So there's a lot of benefits. And also for like the network or team that we're investing in, it's great because they have their infrastructure basically handled, capital, as well as the other expertise that we provide as venture partners. So it's really a great relationship. It's a smart model, and it's just great to see more validators doing it, honestly. So I think it's a great way to align your interests in the space.
Awesome, got it.
Excellent. So you were talking about how you first discovered Ethereum. Maybe tell us your story about when you made the transition into being more of a Cosmos focused investor.
Yeah,
now, I don't want to put words in your mouth that you are like a Cosmos maxi, but certainly like I think you are bullish on Cosmos based on the threads you've written, and also I know
yeah, I definitely I avoid the term maxi generally because I think a lot of negative connotations come with that. It's like the obnoxious guy on Twitter who's like, if you don't like Ethereum, you're an idiot, like those type of people. But I'm definitely a Cosmos advocate, and it's probably the place I'd say is home for me in crypto. So yeah, I came across Cosmos a while back actually, but just the Atom token. And I thought IBC was cool, but I never really dove into it actually until like halfway-ish through last year. And it was actually through Secret Network is how I got into Cosmos, because I've been interested in privacy, and I didn't really see any good privacy solutions at the time. And so I found Secret Network, found it was really interesting. I was also a big Luna investor at the time, Terra, RIP, but that's also a way I got exposure to Cosmos. But yeah, it was through Secret where I really started to dig in. And I think like once I kind of played around on Osmosis and other, IBC connected chains as well, I was kind of like, oh, this is really, really cool. And I think it's like the most efficient cross-chain, setup I've ever seen in crypto. Because at the time, like, nothing was really live. Like there was some Polkadot parachains, but like, XCM wasn't live yet. There's no subnets. Like Cosmos is really the only thing. And so when I found this, I was like super impressed. And then once I like got involved in kind of like the Twitter scene there, like I realized how smart and like collaborative and long-term minded everyone was in Cosmos, which is such a breath of fresh air. Like I was always in the communities like where it's like, oh, up only, like Ethereum's going to 100,000, like that type of stuff, where it's just kind of nonsense. But then all of a sudden in Cosmos, I was quickly engaged in like very like deep, intense technology-based conversations where I was again like, oh wow, I know nothing. I have so much to learn. And for me, that's like a huge sign. It's like, oh, I need to get more here. Like if I don't know something, I want to learn it so I do know it. And so like in Cosmos, I've still to this day I've been constantly met with that. And so it's been awesome being able to like get to know people there, get more involved in that community and kind of like make a name for myself as well in it.
Yeah. While we're on this subject, what do you think about, I've been seeing some sentiment on Twitter, especially about quote unquote, the cosmification of Ethereum. So what I mean by that is like, for example, DYDX moving over, right? And even if, let's say like Uniswap, if they move over to a Cosmos app chain or just like a layer 2 solution, what that's going to do is it's going to remove or reduce MEV and transaction fee revenue from the main chain of Ethereum.
Yeah.
And so do you kind of like agree with that, sort of like the popular ETH dApps will have their own shard or their own app chain in a different ecosystem, sort of like DYDX did, right? And so long term, Ethereum, it may stagnate, at least the main token. And there's also the argument that, okay, like if it does scale, there isn't as much demand for gas, right? So it's like, do you really need a $5,000 Ethereum coin, right?
Yeah, it's interesting. So I guess like the first part is I definitely think we're going to evolve into a world where like a lot of the major applications, Aave, Uniswap, etc., do have their own app chain. It just makes sense in terms of like being able to have that autonomy, being able to have that control over your chain, and a number of different things that I think app chains offer over being an application on like an L1. Whether that's in Cosmos, Ethereum L2, who knows where, I can't say. I imagine they'll stay in the Ethereum ecosystem, like especially the Ethereum native projects like Uniswap, Aave, etc. But I do think we'll see more projects as well hop over to Cosmos who don't necessarily have that like super strong foothold and need to be in Ethereum. But to answer the second part of your question, yeah, it's convoluted because the argument for why ETH becomes stronger is, let's say there's a bunch of L2s or app chains that all use ETH security, then like you kind of have the incentive to stake Ethereum, strengthen that security model so that all those L2s are as protected. One thing I don't really, this is a bold statement, but I have some conditions around it, but I don't really support L2 tokens for the most part. I think they kind of don't have a clear purpose right now. That's not to say that'll change, like that won't change, but like I think right now it kind of fragments the market. Whereas like if everyone were to just buy Ethereum, who would instead buy that L2 token to get the same exposure, I think it'd be a lot better for Ethereum. And also for the L2 itself, because if it's using Ethereum security, then you should want the users to take part in that security and own Ethereum rather than an L2 that's basically just used for like governance and some other arbitrary use cases right now. But yeah, I mean, there's definitely demand side issues that could impact Ethereum, but that, in my opinion, is assuming that the space stays the same size as it is today, which in my opinion is absolutely not the case. I think we'll see so many more users and so much more adoption and just capital flowing in this ecosystem that inevitably all of the major chains will be propped up in a huge way. Like I think we're very far off from all-time highs for the ecosystems to actually stay relevant when mass adoption happens. When that's going to happen, I don't know. But I do think we'll see, a 5-10K Ethereum at some point. I don't know when, but I wouldn't say like the all-time high from this last cycle is going to be a unsurmountable all-time high. That's for sure.
Got it. The point on the layer 2 having its own token, isn't there some need to secure that sort of like shard, right? So you do need that token for that purpose.
Yeah.
Right. Or am I misunderstanding?
Well, there's different different setups. Like some you do need to, but there's also like I don't know if you looked at an eigenlayer before, but like they like basically restake Ethereum in order to secure their chain, which in my opinion I think is a lot better. And I again, like I think that's like a larger conversation, but like one of the main weaknesses in Cosmos app chains, in which shared security largely solves, is that like it's hard to secure 1,000 different app chains in one ecosystem. Whereas like, like not everyone's going to be able to raise a ton of money, have a super robust validator set, and also have a ton of stake. And so shared security largely solves that problem. And so I think like the eigenlayer setups and things like that, where you kind of have a better degree of shared security, is a much better future. And it's also one of the reasons why I've grown to like Polkadot a lot more, because I think I've seen the need for shared security. And there are some Cosmos chains right now that, quite frankly, are pretty vulnerable to an attack because their token value is pretty low. So the validator set doesn't have much value, and that makes you prone to attacks. I don't think it's going to happen, but like, because of slippage and such. But like, I think shared security is kind of a must that is going to be more prioritized over the next year or two.
Got it. Makes sense. Wanted to get your thoughts on Evmos. So it's an alt EVM, right? And there's a lot of hype around. The narrative is it's supposed to bridge EVM or Ethereum liquidity over to Cosmos, right?
Yeah.
But so now you see an example, let's say like DYDX, they're going to come over and instead of building on Evmos, they're going to have their own app chain. What are your thoughts on, future ETH dApps, or even like, let's say dApps from Avalanche moving over to Cosmos? Why would they choose Evmos, or should they, go with their own app chain? Like sort of that decision process. And then like, how does that impact Evmos? I don't know if you have a thesis around that.
Yeah, I can't say I have a set thesis, but I kind of just gave up some ideas as you were talking about it. I think a lot of it depends on like the size slash prominence of the application. Like kind of going back to what I was saying, like not every application is big enough to have its own chain. And so sometimes like being able to launch in a chain that already has an existing user base and existing like kind of marketing going for it is what you need to do. So like, I mean, imagine if you're like kind of just like another, not saying every, imagine just another DEX basically. And there's Osmosis, Crescent, and all the dexes that exist on some other chains as well. Like launching your own application chain, sure, it could work, but it'd be a lot harder for it to work rather than like if you fill a specific need that exists in Evmos, for example, that all of a sudden the entire Evmos user base can just flock over to and use. And so that's kind of what I think the decision-making process is going to be. There definitely are going to be a lot more application chains, like tons more, but I think the idea that every application should just build their own app chain is kind of misleading. Like even with shared security, there's still a lot of, I think, like problems with doing that, honestly. Like I think there's a happy medium that's going to be found eventually.
Got it.
I would like to get a little bit into the shared security thing,
Yeah.
because what we see right now on Cosmos is basically every chain has the same set of validators, right? It's the same 100 validators that you find in every single chain. So what's kind of the point of shared security if the different chains don't have different validators to secure it? You know what I mean?
Yeah, I mean, the point is basically so that future chains don't have to, like form that validator set that you just mentioned, and also don't have to worry as much about like their token price to secure the chain. And so I think like look at Polkadot, and also like a lot of ETH2, like ETH2s, like they gain strength from having the either Polkadot token, Kusama token, or ETH token securing them. And so naturally, like your level of security, your vulnerability to attacks is lower, and I think like it's just a more secure model. And so for a lot of applications or chains, whatever it might be, that don't quite have the need to have their own validator set, being able to use the Atom token, which has a much higher market cap and arguably will have a even more lucrative market cap and price once this actually happens, makes a lot of sense, because now you can use Atom security, you can use the hub security, which is the strongest in all of Cosmos, to secure your chain. And so that comes with a lot of benefits. And I think, like, again, I've been saying it, like, it's hard to get your own validator set. 100 validators, it's not easy. And so I don't think like in a world with 1,000 Cosmos connected chains, that's even possible in a secure way.
Yeah, but so it's still, because a lot of people kind of criticize that even Cosmos, the Cosmos Hub, doesn't have enough different validators, that it's still too centralized.
Yeah.
And in the end, that will not change with shared security, right? So
yeah, I mean, in my opinion, the thing we need to focus on first before we talk about the actual like total number of validators is the stake distributed amongst those validators. Like right now we have a problem where even in Cosmos, like the top 5 to 10 validators pretty much have the entire stake of the network. And so like I think we should focus on decentralizing within those 100 before we worry about, okay, is 100 enough? Like even like with Ethereum, like you look at Lido and Coinbase, like they have a pretty significant stake on the Ethereum network. So it's like, sure, the number of validators is great, but if you still have 3 to 5 validators who are running the whole show, like that's not decentralized. It's even less decentralized than having 100. So it's like, I understand that argument people make, but I think like we need to focus on, what's at hand first, and then worry about expanding over 100 validators.
kind of makes sense.
So you mentioned Polkadot, but are there other sort of ecosystems that you're bullish on outside of Cosmos? And I saw your thread on Composable, so that's definitely a unique sort of a protocol. But yeah. And so what's also your general take on the future of multi-chain? I mean, if everything's going to be interconnected, I guess what does one particular ecosystem or chain have to do to differentiate itself?
Yeah, I've been thinking actually a ton about this week. So multifaceted question. So I will say, I got into Polkadot really early actually, because I knew Gavin Wood through going through Ethereum history basically. But then I didn't like the parachain process. I thought it was too slow, and that's why it kind of fell behind this last bull market. but at the same time, there are a ton of strengths. So Composable actually brought me back into the Polkadot ecosystem because I think the fact that they're not bridging, but they're bringing IBC over to XCM and actually over to Near soon as well is super innovative. And so that kind of naturally brought me back into studying Polkadot more. And I think they have a really unique model and one that's going to do well. I don't think Cosmos and Polkadot are necessarily competing. So I think that there's differences in terms of who would build in each. But okay, to answer the second part, like, where do I see multi-chain kind of evolving? I kind of think that IBC has the potential to be like the universally adopted bridging and messaging kind of system. I think like what Composables, and actually there's also Polymer working with Composable doing a very similar thing, who are also like really great to look into. But yeah, I think like the fact that like with any chain that's light client compatible, you can just bring IBC over to it is really smart. And it kind of makes sense. Like there are actually other good bridging solutions for sure. I think Nomad, Axelar, et cetera, all great. They're just definitely more economically incentivized right now. But like the fact that you could bring IBC over to Polygon, a lot of different L2s, Near, Avalanche, et cetera, like kind of means it could be like the HTTPS of Web3. And I'm kind of seeing that happen. I think a big thing we need to figure out is how to make it so relayers aren't losing money. That's the next big hurdle to all this, I think. And there are some ways that's being addressed right now, but obviously nothing concrete. So that's because I think as long as relayers are breaking even, IBC can work as intended. But if relayers are losing money, it's hard to see that actually growing. But yeah, what was the last part of your question? I think it was like three questions. I lost the third one.
Yeah, it was just more on like, what does the one ecosystem have to do to differentiate itself to be like a winner?
Yeah, I mean, it's largely all about like, who's building on it and what can users do on it. Like I think like look at Terra, for example. Like Terra was a Cosmos chain, like, technologically is actually trailing a lot of Cosmos chains. Like Juno is better from a technology and performance standpoint, and yet Terra's usability and like the number of users on it was way higher because they had a few flagship applications that everyone wanted to use. Obviously that story ended early, but like long term, like if you can build like killer applications that institutions, retail users, etc., are using, think like Fidelity built on blockchain, like then you'll see those ecosystems just flourish naturally. Because if you have a Fidelity type thing, like you're going to have so many different things built up around it. And so I think like we'll come to a point where a lot of the chains are, they're abstracted away from the everyday user. Users aren't going to know, oh, I'm operating on Ethereum, oh, I'm operating on Cosmos. And second, I think from a technology standpoint, chains are not going to be nearly as differentiated as they are today. I think there's going to be standards that are adopted. Sure, there'll be slight differences that will make developers choose one chain over the other. But I think like long term, it's going to be hard to distinguish to the everyday person. So ultimately, it's just going to be the applications that are driving traffic to different networks.
You mentioned Fidelity on the blockchain, right? So that brought up another question I was curious about. And so I know you came from a TradFi background. Do you have any thoughts on fixed income DeFi products
Web? So I think that is going to be something that's going to be very involved in the next wave of DeFi. I've actually kind of been waiting for it to happen. I've been looking at a few different protocols over the last few years that have been kind of attempting to do this. Like 88 MPH is one thing that comes to mind. But I think like right now it's hard because you don't really see the real world adoption in DeFi. It's mostly people who are just basically down to experiment. And so naturally, like, fixed income and things like bonds, they're not the sexiest financial instruments. And I think everyone in crypto, not everyone, but most people are going for 100x. And quite frankly, you're never going to get that in a bond. So I think like right now in a bear market where returns are not at all the same, it's basically impossible to do 100x. I think the only way to do 100x is shorting something at this point. And so I think like naturally people are going to seek more sustainable fixed ways to accrue value. And so whether that's through staking, bonds, other fixed income instruments, I think we're going to see a lot of, progression there. And so in terms of like what's going to be the next, like one of the major components of the next DeFi summer, I think that's for sure going to be one of them. And it'll happen especially once you see institutions like Fidelity and other, veteran traditional finance institutions joining the space.
Yeah, for sure. And I think Cosmos is sort of gearing up to serve that need through protocols like UMI.
Yeah,
I'm certainly excited for that.
Yeah, agreed.
What would we need to do to attract such institutions coming into DeFi? Because I think we're quite
Yeah.
far away from them adopting DeFi.
Oh, I agree. I mean, the first thing is I'm entirely out of our control. We need regulation, like, or at least clarity on regulation. I pray it's done the right way. Like, I mean, the US has been tossing around some ideas that are very scary, and I don't think they'll be implemented at the end of the day. Like, I hope, at least if this doesn't happen, I'm leaving the country, but I hope we at least adopt a stance that at least, encourages innovation, because that's healthy for our country. We sure need it right now. But yeah, I think regulation is the first thing that needs to happen in order for institutions to be able to step in. I was talking to someone from a major bank the other day, who's like the head of digital assets there, and they were like, yeah, we are ready to go all into crypto once we know we aren't going to be, waist deep in or neck deep in lawsuits when we do that. And so like there's plenty of like love in the, like, people want to get into this space. It's just they're afraid to. Everyone who has money or like different stakeholders who they need to act on behalf of, they can't just jump into a space without regulation, because they might get punished in the worst of ways and end up ruining their whole company. So that's the first thing. The second thing is scalability, without a doubt, needs to be increased. Like if we were to see mass adoption somehow during the last bull run, every single chain would have broke and this whole space would have been unusable. Like you saw it in basically every chain when there's a popular NFT mint or whatever that drove high traffic, and basically every single chain that existed went down. And so like, yeah, the internet, sure, it goes down every once in a while. You'll see Amazon go down, things like that. But like, I've never had a day in the last 10 years where the whole internet can't be accessed. So we need to, move past that. We need to figure out scalability solutions, which I think everyone is doing right now. Like there's a reason why Cosmos exists. There's a reason why Ep09 is a thing. Like there's reason why Polkadot, et cetera, all exist. So scalability is being addressed. And the third thing I'd say is just security. Like people need to feel like their money is safe on chain. So that has a bunch of different facets. Like one, from a code standpoint, we need to have more standards. Like we can't have these exploits happening all the time that are causing people to lose hundreds of millions of dollars. And so bridges obviously need to step up their game. We can't have multi-sig bridges anymore. I mean, in the long term, like right now, sure, maybe there's some use cases for it, but like a 5-person multi-sig bridge, in my opinion, just doesn't work. It's way too vulnerable. And then obviously from a code standpoint, what happened to Osmosis a few weeks, months ago, whenever that was, not great. We need to be better with audits and adopting standards for code. And then obviously going back to validators, like we need to make sure these chains are properly secure so that they can't be attacked. Because one problem with bringing in institutions and big players is like what we saw with Terra, basically. Like you have people with basically infinite capital who, if they want to, can take something down in a minute. So like we need to be able to defend ourselves against that. And so that means thinking of the worst case scenario and making sure we have a plan for when they happen, because right now we're all small fish in the sea compared to what's about to come in my opinion.
Yeah, definitely. So I'd like to shift the focus a little bit more on Cosmos, as we are at Cosmos
Sure.
DAO here. What are some things in Cosmos that you're the most excited about the future? Can you give us your Cosmos thesis?
Yeah. So this is hard. My boss and I actually the other day, because when Kyle Samani tweeted that thing, he was like, "What's your favorite chain in the Cosmos?" I was like, I have no idea. Like I can't answer that. Like there's so many. So like I guess I can go through different things I think that are happening in the Cosmos that are very interesting. So I already kind of went into this, but composable finance and Polymer, I think that's awesome what they're doing, and I love how successfully they're doing it already. Like the fact they're already going over to near this soon is amazing. Celestia, obviously, like amazing as well. I think it's going to be a huge innovation for the space once it actually has the time to like kind of play out and mature. And I think Archway is doing a lot of interesting things as well. I think, especially in a bear market, you need to have more developer incentives built in at the network level, because we have too many tokens right now at the end of the day. Like from like a user standpoint, it's super hard to like own this many tokens and deal with this. And I think also like there's a lot of tokens that just don't need to exist, quite frankly. And so I think being an Archway and being able to get a sustainable revenue stream through just driving traffic to the network is a huge perk that I think will actually cause the network to do really, really well in a bear market like right now. Because like if you're a developer and you're launching an application, your tokens, sure, let's just say it's a governance token, which like, yeah, they have a purpose, but like financially speaking, they've underperformed. You are more likely to go to Archway where you don't have to be token dependent because you have other revenue sources, and then you can distribute that revenues accordingly. Like you can distribute it to a DAO, whatever it might be. So it adds an extra layer of like, sustainability to your application basically. And then on the DeFi side, I've been looking at Say, who's doing a lot of cool work in order books and bringing that over to Cosmos as well. I think that's particularly interesting because AMMs have also kind of been underwhelming in terms of how they performed. I think there's various capital inefficiencies that kind of come with them naturally. So I'm curious to see how order book does in comparison to that. I can't guarantee it's gonna be better than AMM, but like I want to see it. So props to them for giving it a shot, basically. And then I don't know how to pronounce this chain, but Quasar, probably not the right, but QUASAR. They're bringing vaults over to Cosmos, which is exciting. So basically, you can like put in an LP token and a multitude of different strategies. It's completely permissionless, and basically it works to like bring in greater returns to people who are providing liquidity, but also to the protocols who they're involving as well. Like it's supposed to solve fragmented liquidity and a bunch of different problems. And one last cool thing about them is they're actually in like creating a treasury in a way that's almost like an IBC index. So right now, a problem with IBC that I struggle with, like, sure, we have the Atom token, but that doesn't capture any IBC value at all. Like it only captures like how much securities in the hub pretty much right now. So I think like having a treasury that basically includes a bunch of different other IBC tokens, it all goes back to the QSR token, is very interesting. I'll probably buy it because, I right now can't track IBC, like I said. But I think like anything kind of introducing anything new, whether it's in DeFi, infrastructure, et cetera, that's what I've been looking out for. It's actually my job, I guess, to look out for it. But yeah, there's a lot of cool things. Like I barely even scratched the surface in terms of like all the things I'm like loving what's going on in the Cosmos right now.
Yeah, it's crazy how much is happening. And
Nuts.
I think you scratch one. You talk about one thing, which is the value accrual or the value capture of Atom, which is I think a big discussion that we're still having all the time or seeing all the time on Twitter in Cosmos.
Yeah.
Do you think that the shared security alone is enough of a value capture mechanism for Atom, or do you think like we need more? I mean, more is coming now. That Prop 72 was, or will be, it was, So, what do you think there? Is Atom set up well the way it is now, and with what's coming to accrue the value of the Cosmos ecosystem, or do we need to do more?
Yeah, I mean, I think there's definitely more work to be done. I think shared security, Prop 72 are a fantastic first and second step. I think like naturally, like I was saying earlier, I think naturally when you have shared security, you'll see more users actually stake their Atom because like, let's say you're using the, I forget what it's called, the PDP, the P2P chain, whatever it is, Neutron, yeah, that's it. Let's say you're using that and like you want to make sure your stake is safe. So you're more likely to buy Atom, stake it, and then you can liquid stake it with them. And so I think that offers a lot of value, but like with that being said, there's more to go. I mean, I don't know if I agree with Prop 69 necessarily and bringing smart contracts to the hub. I've actually kind of gone back and forth in that for a while. I do think the governance process for that and how that went was horrendous. So I hope we can improve on that because you can't really have people, bribing people to vote a certain way. I won't say names, but I think you know who I'm talking about. But yeah, I think like long-term value accrual to Atom, like there needs to be more use cases. Shared security is one great way, but like there needs to be more than that. If we're talking about making Atom a top 5 token. What those things are, I don't know. I think interchain routing through the hub is also interesting. So that's another way to accrue value to Atom. We'll see if that actually takes place. But I think what I will say that I do think is the biggest strength of all of this is that none of this is forced in the Cosmos ecosystem, which is a huge difference. Like if you set up a chain in Polkadot or Kusama, you have to use Polkadot or Kusama for security. And again, that has its strength, sure, but I think like that's kind of centralized. And so giving people in Cosmos the option to, set up their own validator set, use their own token, or decide to use shared security, I think is the way to go. And the same thing can be applied to interchain routing. I think like should you want to route through the hub, you can, but if you don't want to, you don't need to. And I love that mantra. I think that's the future of, and that's the way we actually evolve to be decentralized, giving people choice rather than forcing them into doing something. And so I love that Cosmos, it would be more, valuable for the Atom token to be the, security token or the validator token for every single Cosmos chain, but that's not decentralized. So again, like I'm glad that they opted to go that route because it's the right way to go, in my opinion.
Awesome. Yeah.
And I think as more and more protocols try to integrate Atom let's say, for example, like Agoric,
Yeah.
using it as collateral for their stablecoin IST, or NFT marketplaces that price their NFTs in Atom. That will also certainly help.
Yeah, you're spot on. That's something I usually talk about as well. I forgot to, but like DeFi utility of Atom is a easy box to check off in my opinion. So I love that Agoric and other stablecoins are bringing Atom to back them, and I think that'll only expand over time. So 100% right. I think that'll do well as well.
Yeah. Do you have a macro thesis on? I know we're in a bear market, right? I don't know if you track still track the macro picture and how crypto is affected, and perhaps like if you have a prediction on when we start to sort of go back up and start a new bull cycle.
Resume the up only cycle.
Yeah.
Yeah. So I mean, I studied finance and economics. So economics for me is definitely like probably my biggest strength in terms of like what I feel like I have really good understanding of. Yeah. So I definitely think we still have some more pain in front of us. The degree of that pain, it's hard to tell. But I think like naturally, like the Fed is going to have to continue to push down inflation at basically all costs, because at the end of the day, they're kind of around to protect the dollar, and inflation is not great for the dollar. So they need to make sure that they can curtail this before it gets out of control, and which my opinion, the borderline already is. Like, there's no way we're only at 8.5% inflation. Like everything I buy seems to be 20 to 25% up from last year. So like, it's hard to see where they're pulling those numbers from, but that's a separate conversation. But at the end of the day, like it goes back to say, like, they know that, and they have to continue to be extremely contractionary right now to stop that. And so that comes at the cost of everything that we want and love, which is prices go up, because in a contractionary situation, like debt's more expensive, and that's what the whole economy was running on for the last several years. Like there was no real growth in the economy. I think it's pretty safe to say that at this point. It was just money was cheap, so everyone was borrowing, everyone was leveraged, and that made just economic growth skyrocket. You can see it in housing, you can see it in basically every single financial market that exists. But naturally that has to come down, and so I think like at best, I've kind of been saying this for the last like 6-7 months, is at best, we're going to go back to where we were before the pandemic happened, because economically, the pandemic never happened, in my opinion. Like in a real level, none of that growth was real. None of it actually happened. So we have to, at best, settle there. But then again, it can be argued that the economy has actually shrunk since then. And especially with like, the Russia-Ukraine situation, China potentially, who knows doing what, like there are a lot of factors that could lead to the economy actually being smaller than it is. So I think we're going to at least near a recession. We could fully enter a recession, a somewhat prolonged recession this year, potentially into next year. But in my opinion, what's going to have to happen is, I'm crossing my fingers, inflation is curtailed by the economy shrinking. I think the Fed's going to have to eventually be like, all right, well, our economy is going to be absolutely crushed if we keep going this way. So we're going to have to introduce some more expansionary policies. And what those are could range from, interest rates going down again to, hopefully not QE. I don't really agree with QE fundamentally, but who knows? So I think once that happens, you'll see all of a sudden up only resume again. And I kind of hope it's like, it gives us some time to make this space a lot stronger and more technologically sound before that happens. Because like the last thing I want is, again, like everyone being interested in crypto and it just becoming a casino again. Like I want there to be real value to be retained when people come back again. And so if we get like 8 to 12 months, I think that should be plenty of time for like Celestia and a lot of other really innovative things to mature and actually be usable. And so that's kind of my hope, I guess. It could be longer, could be shorter. It's hard to tell. But that's kind of my prediction in terms of where things are going.
Yeah, and perhaps the regulatory landscape will also be more clear. And you have other things like maybe real world assets, that are tangible, that are brought on chain.
That's another great conversation right there. Real world assets, like it's like just like fixed rate returns. Like those are something that's going to come about in a big way, I think, in DeFi.
Yeah, for sure.
One thing that would interest me is, you said like the economy, all the growth that happened post-pandemic didn't really happen, right? That's maybe true if we look at the economy as a whole, but if we now niche down on crypto, I mean, I think I would argue we are definitely much, much bigger, and there is much more adoption, much more protocol. So I would say crypto has definitely been growing in size and adoption since the pandemic. So there was economic growth there. Would you still say, because we are coupled to the stock market and the just general financial market, that we are also heading down to pre-COVID levels just because of our because we're so connected? Or can crypto decouple a bit because we actually had that economic growth that the rest of the economy was missing?
Yeah, so I mean, I definitely agree that crypto has obviously grown. Like that, my statement was definitely more of a blanket statement. Crypto has definitely advanced immensely since early 2020. But you're right. Like, unfortunately, we are highly correlated to the Nasdaq and different, financial markets, and so we track it completely. Like, if you look at it, pretty much every day the Nasdaq goes down, crypto goes down, unless like the Celsius situation happens and weird things like that. But like, I hope we don't go back to 7K Bitcoin, like 7K. That'd be unfortunate. And I think like if that were to happen, it just kind of means that people are still not completely convinced in the space. But from who I've spoken to and what I believe, I don't think that's the case. So I'm not going to put out a certain number for what I think is a bottom, but like 20K right now to 7K is way bigger of a drop than what I predict. And so I think like the lowest I could see is hopefully like in the low teens, maybe like 11, 12 Bitcoin. But even that would be pretty shocking. Like I think there's a good chance we see Ethereum in like the 700 range, maybe down to 500 if something happens. But like, yeah, I have a hard time seeing ETH, around 150, Bitcoin around 7,000, like it was, before the pandemic happened. And so if you look at, growth, 7K to like, let's say 14K bottom over 2 years, that's still a pretty damn good return. That's 100% growth in 2 years. Like, show me any indice that's ever done that in the stock markets. Like, it hasn't happened. And so like from a actual like high level view, that's still fantastic growth. Like, no compound annual growth rate's 100% over 3 years. So like if we are able to do that, that shows the space is the fastest growing space in the entire world. And in my opinion, it is. So that would be pretty validating if you ask me.
Awesome. Yeah, makes a lot of sense. Like that view.
Yeah, I hope it makes sense. I mean, if we go down to 7K, it's going to be interesting.
Would definitely destroy a lot of people if that was to happen, and at this point maybe even countries.
That's what I mean. Yeah, maybe one particular country might get wrecked. Yeah.
Switching gears a little bit, I think because you're obviously also an investment company, and we hear a lot that Cosmos has very little institutional money, especially if we compare it to like AVEX, Near, Sol come to mind, that are heavily backed by big institutions. Do you think that's a big disadvantage for Cosmos, that we miss that? Do you think it's still coming, or in general, why do you think this is the case?
Yeah, so definitely there is reduced VC and external capital interests in Cosmos. That's without a doubt the truth. I do think more will come. Like, without a doubt, like from conversations I've been having, like more people are saying Cosmos. It's not necessarily mean like, oh, we're about to enter Cosmos, but like it's coming up all the time now, which is great. And what I think is like most important, and like VC definitely has a bit of a stigma in crypto that I think like a lot of us are changing, which is great. But the problem is like there were a lot of extracted VCs who came in this last bull run to where they only provided capital, wanted to get a specific return, and they just pulled their money. So naturally, to the retail users or token holders, that's not great at all, because you're basically getting dumped on by the very people who built up these prices in the first place. So what I think is most important for Cosmos and other chains that are just starting to now get attention is actually bringing in VCs who want to, create value for these chains. So not being extractive and only creating value for yourselves. Like, we need to have VCs that are there to add additional value beyond just capital. So whether it's expertise, like validation, like we can provide, and like I kind of think like, whereas like a VC needs to be able to like help the builders just build. So like whether that like, so let's say you have a founder who's brilliant in the coding side of things and building amazing products, then the VC should assist in marketing, BD, and all like strategy, all those other things, so that that founder can focus on what they're amazing at, and then you build a team around them. And so being an early stage investor, that's like a lot of what we're looking at, is like okay, what value can we provide to this project? Like what sustainable long-term value can we really provide so that we're not just extractive? And also, like, quite frankly, if we're helping you out, I like to believe you're more likely to succeed. And so I'm saying all of this, like these are what investors, like, teams in the Cosmos should be looking for. Like, sure, it's always great to take a check, but like that check could very well be your demise a few years down the line. And so I think like looking for investors that are like truly engaged and involved in what you're doing, and also who you can relate to. Like I think you need to be able to work with your investors and your backers as if they're a part of your team. And that's something that we definitely try to do. I think it's one of our biggest strengths. I always like, I mean, my background, I've been crypto native for a few years now. So it's not like I'm just some, like, TradFi guy who's coming in here looking to make a quick buck. Like I truly believe in this space and want to build this space. And I know my whole team's the same way. I've spoken to many other VCs who are also the same way. So there's plenty of us out there. There's a lot more coming into Cosmos, but I think as long as teams are looking for the right investors versus just whoever's going to write the biggest check, I think it's a much better way to go about it. And I think a lot of people I've spoken to in Cosmos feel the same way. I think we're a very smart group generally. So I don't think we're one to just take a short-term check for that and like ignore the long-term implications of that.
Do you think part of this is also because it's just too easy to kind of cash out quickly? Because if you compare it to like TradFi, if you invest early stage into a startup, you can't sell it because it's not publicly traded. So you literally have to wait until, well, the company makes an exit or decides to be publicly traded. So your investment horizon is 10 years, I would say, right? Whereas in crypto, you get those tokens and maybe you have a 1-year cliff and then you can start dumping the tokens on the market. And I mean, in the end, those funds, their job is making money for their investors. That's what their purpose is. So of course they will take the way out and realize the profits as soon as they can. And I think you can't really blame them. So should we in crypto maybe move to the traditional model where we actually sell equity of the company instead of just the tokens?
Yeah, I mean, so I definitely will say your points are very valid in terms of why like fundraising with tokens had its weaknesses for like the long term. I will say one thing is that like my only counterpoint is like ideally funds can have LPs who are also long-term minded in the space and believe in a project and don't want to just dump tokens. So like that also goes on to like us right now. Like I said, we're raising around, like it's making sure we're working with the right partners ourselves because we believe in the space. We want to hold tokens for a long time. And so like, and also stake it, which is a great revenue stream that doesn't exist in traditional finance and other, investing spaces. But yeah, I think like being able to, that's a huge strength, like being able to stake, hold it long term, but also have the flexibility is great. But yeah, we are definitely seeing more equity, I would say more equity deals. And that's also coming with what I was talking about earlier with like projects realizing they don't need a token. And so instead of, having a token, they'll raise equity. And so I think equity is a great thing to incorporate. I think it was underutilized for a while and led to a lot of problems with VCs dumping tokens because they don't have the value accrual they need. But at the same time, like I think if you're an L1 blockchain and you're looking to, like raise a validator set and raise money to do things like that, like I think token's still the way to go because you'll find a lot of VCs who will end up staking that token. So like basically they provide you with capital and then they also provide it on the other side by staking. So they're securing your chain and also providing the capital to actually fund your operations. So that's like a great situation in my opinion. And I hope that continues to be the way. But like, yeah, I mean, like I think there's a middle ground. I think projects that don't need tokens shouldn't raise a token generally. And if you are very token dependent and there's real reason to raise with a token, like the example I just provided, I think you should still raise via token. So like we're open to either. I think it comes down to the end of the day what makes the most sense and what has the most long-term value, because you're 100% right. Like raising with a token and having a liquid market is something VCs never ever have in Web2 and other traditional branches of investing. So like being able to have constant liquidity naturally sets up conflicts of interest that can be taken advantage of. So I think just being smart about that, being realistic with what makes the most sense for you and not just following what other projects has done is something that, especially now in a bear market, I've been seeing more often. I think it's going to evolve that way.
Awesome. Yeah, that makes a lot of sense. And then a last question to that topic. is, I mean, right now you see a lot of hesitations by funds because the market, I mean, everyone's kind of shell shocked. And that definitely also slows down development. What do you think needs to happen so that funds get more willing to invest again to accelerate the development of Cosmos and obviously also crypto in general?
Yeah, it's a hard question. There's a lot of factors there. Like I will say generally, like kind of our outlook is that like for VC investing, like so we have like a 5 to 6 year time horizon in our investments generally. For VC investing like this, it's actually best to be in a bear market because you're buying at discounted valuations, which have a lot of upward room for growth. And so if you look at historic VC returns and bear markets inside and outside of crypto, the best funds have typically been raised and emerged during bear markets. So that's something to keep in mind. But the question is like, okay, when is that actually going to start happening? And I think what has to happen first is projects are going to have to reduce their valuations to match the public markets more. I think a lot of projects now are still raising at valuations that are closer to where they were in February, which if you look at, the public market, February versus now, very, very different. So, private valuations kind of need to adjust accordingly. And you're kind of seeing that, like I've seen a few deals recently where like, it's a very, very solid project. They were realistic in their valuation and they raised their round, no problem. And so it's kind of now like, just like we're having to become more realistic on our end, like founders also need to be more realistic where you're not going to raise the money you could have potentially raised in February. And quite frankly, I'd argue that's borderline a good thing because like I said back then, it was pretty extractive for a lot of investors. So now you're actually making long-term partners who want to build with you through thick and thin. So it's a great time right now to raise around and actually form long-term relationships with investors and other partners. Yeah, I think like it's hard to tell because I think a lot of investors right now have the belief that we're going to go down more. And so it's somewhat hard to justify why you would invest at a valuation when in 3 months you could see it being 25% lower. And it's again, like that doesn't mean you'll never invest because if a project's going to raise around right now and you want to be in that round and like this is a company you believe in for the next 5 years, like you'll be flexible in valuation to a degree. So it's not like you have to follow these certain rules to raise money, but definitely investors are way more valuation conscious right now because a lot of people got burned over these last 6 months. So like, I like to think we're going to learn from that. And I've definitely already been seeing that play out. And so it won't be, to answer your question more specifically, it won't be one specific thing. I think that triggers, okay, all of a sudden VC money coming in. It's just going to be the accumulation of people becoming more realistic on all ends of the spectrum. And then eventually you'll see it come in because long-term value is still here to be created and everyone sees that. So it'll happen.
Yeah. The same way that also the crypto market is going to pick up eventually again. We're getting out of this hole and
100%
moving back in the right direction because our technology is revolutionary and we're trying to solve real world problems here.
Yeah. And like technology always moves towards more efficient and effective methodology. And that's exactly what Web3 presents. That's why the internet came about. That's why Web3 is going to proliferate the same way. Like a bear market shouldn't impact your long-term vision of the space. If it does, you might want to reevaluate why you're in the space. Like anyone who's here for the technology, from what I've seen, is just as engaged and involved as they were when prices were triple what they were now. And I'm certainly maybe even more involved right now because the opportunity to make an impact, I believe, is greater. And so we're still here building. Nothing's changing. 5 years, I think we'll still be all filthy rich as long as you pick the right horses to win that race. And yeah, the growth potential is insane. Like a temporary bear market is nothing. In my opinion, it's an opportunity for us to make even more money. So I'm kind of excited for when I feel like that bottom comes in, I can back up the truck a bit and set myself up for that next bull market whenever it comes.
Awesome. Yeah, 100% agree with your view there. And I think we have covered a lot. It's a beautiful point to also kind of wrap it up. It took a while. Maybe if people want to find you, what's your Twitter? Where can people reach out to you? Maybe give us some contact.
Yeah, you can find me on Twitter is the best way, I'd say. It's my name, Dougie De Luca on Twitter. I think I have DMs open. I should at least. So like if you want to get in touch with me, whether it's just to talk, chat interesting things, if you are interested in fundraising or whatever it might be, feel free to send me a DM. I don't read them every day, so if it takes me a day or two, apologies in advance. But yeah, and then I also use Telegram, but I'm probably not going to shut out my Telegram because that would be a lot. But yeah, Twitter's the best way. Definitely follow me, follow Figment Capital. Lots of alpha on the way soon. So yeah, that's what I'd say.
Yeah, definitely. Also, we're gonna make sure to link Figment and your personal Twitter in the show notes, so you can
Appreciate
just
it.
click the link there. And yeah, then Dougie, thank you so much for coming on. It was a super interesting conversation. I love this episode, so thank you so much for taking the
Yeah,
time.
thank you for having me on. It was great to discuss Cosmos, economy, and more. So yeah, it was a great conversation. We should do it again at some point. Maybe when something cool happens in Cosmos, we'll run it back. So yeah, thanks again. It was awesome.
Yeah, definitely. I mean, Cosmos has enough drama, so that we will find a chance.
Yeah, there's always plenty to talk
Interesting.
about.
Yeah.
Like every prop that comes out, it just is madness. So it might be in a few months when we can run it back. Who knows?
Exactly. So thank you so much, and everyone also thank you so much for tuning in and listening, and see you next time.